Morning, everyone. Can you guys hear me?
All right, 30 seconds to the top of the
You guys
hour.
hear me? I was having some major computer issues yesterday. I think they're finally sorted out, thankfully. I was just getting lag upon lag upon lag yesterday, and I did like a full restart, and I think that really helped me. So hopefully that does the trick. I have 4 monitors. We'll get started here in just a few minutes. Yeah, PC, not Mac. Morning, good morning, good morning.
Hey, good morning.
Hey, what's up?
What's up, man? How you doing?
Good. Good for now.
Cool. Friday's here.
Thank God.
Friday. What's up, guys?
Morning, good morning. We'll get started shortly, guys.
Okay, sorry. My Wi-Fi all day has been off and on, so if I get lost again, sorry about that.
No worries.
Yeah, but Monday, new hotel, so hopefully it'll be better.
Cool.
That is the downside to traveling all the time. Sometimes you have a good connection, sometimes not so good. Jimbo, I'm in Kyoto now. Be here for the next week and then probably Nagasaki.
All right, let's get started here, guys. So, morning, everyone. Welcome back to live trading. It's been a hell of a week in the markets. Up, down, left, right, sideways, everything. So, where do we begin? It's Friday. Fridays usually see a lot more elevated volatility in the markets due to zero DTE options. For people that don't know, zero DTE means 0 days to expiration options. These are the most volatile, most risky type of options to trade, and they tend to move the markets. There's something about options trading that a lot of people don't know about. Well, maybe they know, but options trading is pretty much like buying a lottery ticket. 99.99999% of the time, your lottery ticket's not going to hit, but the 0.00001% that it hits, you make money, right? I don't know if you guys know this, but 95% of options contracts go to zero. So a lot of people, when they first start trading, they start with options, they start with Forex, they start with futures, because they're all highly leveraged products, right? It's very, very highly leveraged, meaning, you could turn $100 into $1,000, you could turn $10,000 into $100,000, you could turn $100,000 into $1 million, right? Well, the problem is that there's a 99.9999999% chance that it's not going to happen, right? That's just the damn freaking truth. So that's something that a lot of people, I guess it's a fallacy of starting out in the markets. Everyone's always like, is this an options course? Could I do this with options? Options this, options that. And by a show of, I guess, hands, how many people have traded options, and although the stock went in their favor, the option still went down? By a show of hands, who has that happened to? Now, does anyone know why that happens? When you say that your option is based on the stock going higher, the stock goes higher, and the option still does not change. Decay, everything, yes. So to be correct on an option, you need to be correct on the price, you need to be correct on the volatility, and you have to be correct on the time. If either one of those things is wrong, your option is going to zero. So a lot of people get into the markets trying to trade options as high-priced lottery tickets. The only people that make money trading options are the options sellers. So if you are the guy that's selling the options, don't you want to be the guy that's selling the lottery tickets, right? Because even if they win, even if they lose, you still make money. So that's something that a lot of people have been asking about is, options trading. And I've traded options in the past. I do make money on options when it comes to big opportunities. I think my last big options trade was like on Tesla years ago. But the biggest thing to understand, guys, is that options are a losing game. You don't want to be buying lottery tickets and just gambling on your trading. So the reason why I'm saying this is because on Friday there's a lot of options activity, and that options activity caused the market to kind of go crazy. So I expect that there's probably going to be a lot of whipsaw in the market today. I think the overall easier trades in the market are kind of over. Right now, there's a lot of fear with bonds. So someone is selling our United States bonds, our treasuries. Obviously, people are thinking it's China. So China is selling our United States treasuries in an effort to cripple our, financial system, which is smart. They're playing an economic war right now, right? And as you can see, people are flocking to gold. Gold is doing some crazy shit. I think gold is up like 25% this year. If you look at the historic chart of gold, for years, gold doesn't do freaking anything, right? Gold has been stuck in the same channel for the last 4 years. For the last 4 years, it's been kind of flat. Before that, for the last 3 years, it was flat, right? So gold is going crazy as people panic into more safe assets. There's a lot of speculation that the Chinese are selling treasuries to buy more gold, right? So this is all like high level economic type of Sherlock Holmesing, if you would say. What does that mean for us, right? You could say all this shit, Alex, talking about options, talking about gold, talking about treasuries. I don't give a fuck about options, treasuries, or gold. Tell me how to make money. Okay, well, the reason why this stuff is important is for us all to understand what the hell is going on in the real world, right? So when the Chinese are selling treasuries, that means that interest rates are going to go up. If interest rates go up, your mortgage becomes more expensive. If interest rates go up, your credit card APR becomes more expensive. If interest rates go up, your car payment becomes more expensive. So these fucking asshole Chinese, again, not speaking for Chinese people here, but the Chinese leader in China are really trying to cripple our economy. And how can you blame them? We have a president that's coming after them every single day. I mean, I voted for Trump. I got no problems with him, except for all this crazy trade war shit. The problem is that this trade war may eventually turn into a real war, right? It's turning into a financial economic war. And it's not good for any type of business. It's not good for any type of person. It's not good for anything. So the reason why we have to understand this stuff is it tells us that we're in a risk-off market. So we don't want to be aggressive with our longer-term investments. We don't want to be aggressive thinking, all right, we're just going to be buying the dip and then just waiting for everything to behave. We just need to be able to weather the storm. And China's increasing their tariffs 145%. United States is increasing their tariffs 146%. And China's increasing their tariffs 147%. It's like an analogy that Bao gave me. He's like, rich people end up running out of shit to buy. So what rich people end up doing is they buy a boat. They buy a boat that's 120 feet. And then their homie buys a boat that's 122 feet. And eventually they get jealous and buy a boat that's 125 feet. And then it's like this big dick measuring contest of who has the higher foot boat, right? It's the same thing with United States and China. They're both playing an ego war, right? Tariff 125, 145, 165, 185, 100 this, 100 that. They're trying to strong arm each other into someone giving in first. China is a dictator. They've been oppressed for a very long time. They're not giving up. Trump, his balls are the size of beach balls. Guy's not giving up, right? So we're in a situation between a rock and a hard place of two fucking sick ass people, right? And you look all over the world, and I know I'm kind of going on a little bit of a rant, but Trump is the mafia, dude. He's straight up Tony Soprano, this guy, right? And I'm glad that he's on our side. But then again, you got Russia has their own mobster with Putin. China has their own mobster as well. So we're kind of being in a world where these mega countries are being run by the mafia, right? It's pretty sick if you think about it. So anyway, the long story short of it is that until a trade deal actually ends up happening, there's going to be uncertainty in the market. I mean, yesterday, the S&P almost went limit down. We literally almost went limit down yesterday, right? We were just a few points away from the markets halting, right? The last time the markets halted was during COVID. And that's after the biggest green day in history. So after the biggest green day in history in the markets were gonna halt down, right? So I think that we're probably gonna be stuck in a little bit of a range in the market, probably between 500 and 540 is what I'm assuming. So yeah, I think the market's gonna be stuck in a range until we find out, what type of deal United States and China are making. But don't take this the wrong way. This is all negotiation at this point, right? Once you're starting to go with 145, 146, 147, 200, this, that, my ass, it's all negotiation, right? But the problem is it's negotiation at the sake of us people, right? So, long story short, let's just get back to trading. There's too much volatility out there right now. Once we see a more clear directional move, it'll be a lot easier for us to determine what the hell's going on. And that's it. So let's get into building the watch list. So the way that we build the watch list is we always go the previous day's watch list first, and then we build from there. So let's start. KTTA. So this KTTA was my main winner yesterday. I ended up stopping out at the highs, and when I stopped out at the highs, I recognized that it was a pre-market high that they failed. Got back in, broke that 180 key support, washed out, took my profits and moved on. Ended up making $2,800 yesterday. So coming into today, maybe if we get a nice bounce towards that key 180 again. So 180 support should act as resistance. So I'll probably look for 182 and 220. KTTA, 180 support yesterday. Should act as resistance. Looking for a bounce toward 180 to 220 to short. PRFX. Wow, I didn't really see how that ended. That's crazy. So PRFX was trappy. And then eventually it pushed, kind of did the similar type of thing. Pushed through high of the day, ended up failing. Death candle, and then destroyed. So in a perfect world, we would get a nice bounce on this one. I think nice 270 would be good. $3 would be good. And 320. So PRFX, 270, $3, and 320 lines to short. Next is ELAB. ELAB, this thing just halted down and all that stuff, and it's kind of really beaten down. Not really too interested in this one today, so moving on. WHLR just went straight down. No real opportunities there. Moving on. ICCT continues to be an ignore for me. This stock is too random. Can't make up its mind. If it can't make up its mind, I can't trade it. So nothing there. So those are the stocks from yesterday. Let's see what's moving today. Let's see what Tom has on his list. BGLC. It's kind of a little bit of a weird chart. Up, down. So this one's a little bit too random. If you guys, I guess maybe, let me just pause here for a second. You guys can see within 1 second, I could tell if I want to trade a chart or not, right? Within 1 freaking second, I could tell. And maybe that's going a little bit too fast because, I've been doing this for a very long time, but the way that I see it is I need to see a pattern that's very clear. This is down and then up, and then down and then more down and then up, and then down and then up, then down and up. So I don't know which way the stock is going to move. It seems too random. So because the price action is a little bit too random, that's kind of what's kind of thrown me off a little bit. And that's why I disqualify that. So that's why I'm kind of, maybe if I say it too quickly that I'm not interested, it's because I'm disqualifying it because it doesn't seem like it's going to have clear action or something like that. So if I move a little bit fast, it's not because I'm doing something random. It's truly because I could pretty much determine within 1 second if I want to trade the stock or not. So that's just the mindset for that. What else is moving today? So we had Vero. Vero had an offering today, so pretty much ignoring. Vero offering, ignoring. MSPR, potential hot stock. It seems like nothing else is really moving. MSPR, potential hot stock. Potential hot stock because nothing else is really moving today. If you look at this MSPR, you can see there's a very clear support here around, what is this, 270. So 270 key support. If that breaks down, we can look to short bounces. AREB from yesterday. AREB from yesterday trades very, very thin. Lower float. I mean, maybe if we get a bounce towards like, I don't know, like 1050, 1050. It has wide range, maybe 1050 and 1150. So AREB, wide range. So must use less size. Ideally 1050, 1150 lines short. I think that's about it, unless you guys see something else that I'm missing. But overall, looking like a little bit of a muted day. I think a lot of action is going to be on large cap stocks. Also, keep in mind, guys, that we're going to be approaching earnings week next week, I think. So let me just see. I think Netflix always kicks off earnings. So Netflix earnings is on 17th. So Netflix earnings is next Thursday. So next Thursday is all earnings week. So I think that's going to be a very, very volatile market for the next couple weeks. Because these companies are going to come out and they're going to say, hey guys, we don't know what the hell's going to happen with tariffs. So like, we don't know what numbers to guide. We don't know what to say. And the market might be a little bit spooked off all that stuff. So I think that there's going to be definitely a lot of uncertainty, at least in the near future. So that's kind of what I got so far for the watch list. As more time passes, if anything changes, we'll update it. But Steven, I'm going to pass the baton over to you and we'll take it from there, brother. So go for it.
Sure thing. So if I get cut off, I apologize, but I'll do my best to get through this. So I want to revisit this topic, managing your risk and stop placement. I think this was a good one, and I had a lot of questions on this lately, so let's go through it. So if you guys, again, if you have any questions on this, just start typing now. Once I get through this, I'll try to get to the questions if we have enough time. If you have anything to add, feel free to chime in as well. So I'm going to go through these points and I'm going to kind of review this chart real quick, and then we'll see if you guys have any questions. This is a trade I took, I think mid-March, SNOA. So here's my notes in general. Every trade you enter should have a full plan in place. We went over this a lot, but we went over this again yesterday. Complete with your risk amount, your entry area, your hard market stop, and your covers. If you need help with proper planning, get active in the discipline workshop. Your stop should be set at an area where, if hit, your trade idea is no longer valid. Often easier said than done. You can't always, make that possible. Sometimes these things just move up, hit your stop, and then crash. I mean, we saw an example of that yesterday. But we do our best, right? Generally speaking, if our stops hit, it's good to be at an area where the trade is no longer valid. If the stock keeps going up, then that's easy to tell, right? For me, when short, that could be above a previous top, above a death candle or resistance area, and I usually like to put a little bit of wiggle room just to have some room there. Next, if you're often getting stopped out only to see your trade ideas work, consider giving your trades more room. You can start scaling later or higher, obviously when short, or you can size down and scale wider. So yeah, if you're always getting stopped out, that's pretty self-explanatory. You need probably a little more room, or your stop placement is probably with everyone else's, right? Whenever everybody has their stops, right above, let's say key area is 5, you put your stops at 501, 502, it's probably going to get hit, right? So a little bit of wiggle room goes a long way. Again, tight stops getting hit often usually means that you're sized in too much. Less is usually more, and we also went over this recently. A lot of traders come into the discipline workshop, and our first rule is to size down. And what they find is they end up making more money with less size. And the reason for that, I'm sure a lot of you guys have seen that for yourselves. The reason for that is because, we get a higher win rate. So it's better to win like 10 with half the size than to win 5 and to lose 5, which makes us, break even if it's 1-to-1. So sizing down, having room to your stops usually ends up being more money. If you add to a winner, consider lowering your overall stop or make the ads a separate trade with its own risk area. So that brings me to the example that I had on this trade, I think it was mid-March, SNOA. So kind of looking at this chart, you could see that there's kind of three different trade ideas, three different trades in this chart. We had a lot of room to the downside. I don't remember exactly where the bottom was, but we had plenty of room. That gave us a lot of opportunities to add. So trade one, I risked, you could see risk area one. I risked the top of the opening candle, which was somewhere right below 4.5. I entered, I don't know, 20 to 30%. Had it broken that, I would have been out 20 to 30%, right? But it didn't. We broke risk area two. I put trade two on. I almost doubled my size. And then I started covering right before risk area three support, right? Risk area three, once it broke, you could see I started to add. Then it didn't hold, it kind of reclaimed quick, which I didn't like. It's a little hard to see on this chart. But what I did is I covered that add out. So that add ended up being its own separate kind of risk area. So the idea is, 5-7 cents on an add for risk, but if it wins, then I end up, collecting 20, 30, 40 cents down. So that's the idea. After I stopped, cut off the add, we broke back down, I put it all back plus more, and then we got the big wash down towards 3.5 and I covered out. So this, pretty good example of what I'm kind of talking about here with, being fluid with your risk areas, with your trades. You could do this a couple different ways. The way I chose to do it here was I compartmentalized this into 3 different trades. Each one had their own separate risk area. So that's about it. Let me see if you guys have any questions. If you want to comment on anything, let us know. As Andrew says, if you need any additional help or guidance, DM Andrew or REG, and they've got some spots available in their Discipline Workshop one-on-one mentoring group. It's invite only, so make sure you get on their list. Zach, if you're newer or trading under PDT, feel free to reach out. Feel free to reach out with any questions. We also have a PDT Traders channel. Great point. Calvin says, how much was your add for your risk area 2% wise? For risk area 2% wise. So I got, these bullets were generally the same size. So I think I had like 30% on in risk area in trade one. And then when trade two came, I added 20% more.
Cool.
Phil, make sure to use the mods if you're struggling. Andrew loves messages at 9:29 a.m. That's true. That's a fact. Roy, just a comment. I definitely struggle with frontside ads. Yeah, a lot of us do, and that's why we always try to preach to keep it, 30% max. That doesn't mean 30%. Could be 10 or 20%, but the idea is never more than 30%, right? So if it's front side, if you're making higher highs, higher lows before that top is in, then definitely keep it, probably 10 or 20% is what I would recommend. Once you confirm that backside, then you could get a little bit more. Cool. So I think that's it for me. We still got about 3 minutes, so I'll pass it back over, Alex. I'm glad I didn't get cut off due to the Wi-Fi.
Thanks, Steve. Yeah, guys, so pretty much that's it. We'll get started here in a few minutes. If you guys have not already done so, our broker partner is Cobra Trading. It is the same broker that I'm using for live trading and obviously for the rest of the year. They're offering 30 days free commissions, 30 days free platform. We're going to give you guys 60 days additional live trading access, and we're going to be selecting 10 people to come to the New York Stock Exchange with me. So really great opportunity. If you've not already moved your account over from another broker, Cobra is most likely 25% cheaper. So I'm probably saving, based on my fees, I'm probably saving about $100,000 a year just in fees, which is absolutely insane if you think about it. So at the end of the day, guys, my job is to give you guys the best deals, the best promos, the best everything. And I think that we have a winner with Cobra. I actually just met with the Success Trader guys yesterday to kind of finalize our deal together. So we're no longer going to be recommending Success Trader. We just have a couple compliance things that we have to figure out. And then, yeah, Cobra Trading is going to be our main partner for live trading for MIC and hopefully for the next few years. So really excited. You'll get to meet them all at the meetup, which we're also working on too. So that being said, Steven, you want to let them know how they could find you, and then we will wrap up the YouTube stream here.
Sure thing. So you guys can always reach me by email. As Alex just posted, it's stevenrh1@myinvestingclub.com. And if you have any questions about anything at all, trading related or joining, feel free to hit me up.
Cool. All right, guys, let's get to trading.
Cool.